Welcome, Gillian.
I'm delighted to be here. It's great to have a chance to chat.
Back in the 2006-2007 timeframe, you actually made some assessments of some of the, I think, behavioral things you saw inside some of our key institutions. Tell us what happened.
Well, essentially what happened was that I went into this investment banking conference, used my skills from looking at Tajik wedding rituals to try and decode what I thought this tribal group of bankers were doing, and noticed that they were operating with not just an intensely strong sense of clubby identity and a sense of a shared language which nobody else understood, but they also had a very distinctive creation mythology that they were using and telling themselves to justify what they were doing. And what they were doing was essentially repackaging mortgage debt to create CDOs and all kinds of derivative structures around mortgage debt. And this shared creation mythology essentially led them to believe that these financial innovations were automatically good for ordinary people because they made credit more available, and that they were the expression of perfect free markets. This tribal group of bankers was so in love with their own creation mythology and operating under such intense pressure that they were beset with tunnel vision. They couldn't see the contradictions in their creation mythology, and they couldn't see how it was being perverted on the ground in terms of what was happening in the subprime mortgage world.
So let's take that right into the present day. What's out there now that strikes you might be similar about that?
There are many things I see today where essentially you have groups of individuals with strong creation mythologies riddled with contradictions. One obvious place is in the tech sector in San Francisco, where essentially you have, once again, a very small group of elite technocrats who are in command of a technology and language which has the potential to impact us all, because we all rely on their products and services. In tech, it's the internet. In finance, it's the world of money. But the vast majority of people using it have absolutely no idea how these services and products actually operate. And what you see there in that pattern, and I started writing about it back in 2010, soon after the financial crisis, where I started saying, well, essentially, the same type of backlash we've seen against Wall Street will happen in Silicon Valley, and we've now seen that play out. I think human beings can be wired to make good investment decisions, but the reality is we all tend to cling to our own comfort zone. Mm-hmm. That is a human survival skill. So we're all hardwired to assume that the assumptions that we absorbed almost unthinkingly from the world around us are normal, and that everyone else could and should have the same assumptions, and that they will continue indefinitely. And it is always 100% wrong. So the question really is, are we willing to abandon our comfort zone and to try and reimagine the world in a significant way that might feel quite threatening? Because if we have been successful in the past, it is unbelievably hard to in any way step away from the tools that have driven that success. In some ways, what's happened in the world of finance has been the machines have taken over. The algorithms, the robots, the models have taken over. Mm-hmm. And it's hard to imagine that that's going to go back anytime soon. Mm-hmm. And I suspect the next lurch of that shift will be towards using computerized technology to create increasingly specialist, customized baskets of investing tools for individuals that will create a sort of disaggregation even more. Increasingly, financial providers are offering people customized tools to pick and mix financial products as they want. You can see it in terms of crypto, where people are saying, I may not like the money on offer. I want my own individual money, my pick and mix money. I want to assemble it myself. And so when you look at what big asset managers like BlackRock are doing and trying to create customized baskets for people to choose their own indices, if you like, I think that's a trend that's going to grow and grow going forward.
I'm so curious, just following in that, if in some ways that sort of customization might not feed some of the worst instincts that people have. What are your thoughts on that?
Well, there's two things going on which I think are fascinating because you make a great point. Firstly, that this extreme customization is essentially giving a lot more agency to the individual, and they're often very ill qualified to handle that agency. Secondly, one of the ironies of customization is that precisely because people think they have the freedom to choose exactly who they want to be in all areas of their life, whether it's their coffee choices, food choices, music choices, identity choices, in some ways, people cling on to their choices even more strongly than before because they've deliberately chosen them with the impression or illusion of agency and become more, not less tribal in terms of how they behave. This shift in social patterns towards a pick and mix world has gone hand in hand with a collapse in vertical trust, i.e. trust in authority figures and institutions, but a rise in the levels of horizontal trust in your peer group for advice. So in politics, those two trends coming together have been quite pernicious. In the financial markets, what it means is that you can sometimes get, networks of investors who are essentially following a thesis or in love with an idea that in retrospect can seem very strange to outsiders, but at the time becomes overwhelming. And obviously, affects asset values enormously. I mean, just think about what's happened with all the meme stocks on Robinhood, for example.
Right.
The first thing that anyone going into finance should ask themselves is, what is the basis of credit and trust in the thing that I'm investing in? Is it based on vertical or horizontal trust patterns? Who trusts who? And what could cause that trust to crack? I think there's certainly a way of using that kind of trust model to try and screen different asset classes. The other way that I think you can also look at the world effectively is to ask yourself, where is social silence and where is social noise?
Right.
And by that I mean that at any one time, the media and the society that it reflects and serves will have a lot of noise about some parts of our life and extraordinary amounts of silence about others. If you dial back to the period before 2008, what you had for the previous 2 or 3 decades was a world where people were essentially very much shaped by the assumptions of Davos man. By that I mean that there was a widespread belief that free market capitalism, globalization, democracy, and innovation were self-evidently good and would only keep deepening across the world, and that progress kind of only went in one direction. And that was coupled with the fact that in the second half of the 20th century, you saw an explosion in the use of all kinds of computer-driven intellectual tools to try and track and measure and forecast the world. So economic models and balance sheets and opinion polls were all used to kind of be, if you like, compasses to navigate the world with. And what's happened in the last 15 years, we've seen, the financial crisis shake people's trust in free market capitalism, and governments intervene increasingly in all areas of our life, partly because of COVID and the rising national security issues. We've seen democracy go into retreat in many parts of the world. We're seeing globalization essentially under real attack. And innovation, which was assumed by the elites to be the source of things that would save us, has come under question and challenge as well, whether it's financial sector innovation, parts of medical innovation, or most recently AI tools. So what you're seeing is a lot of geopolitical and cultural upheaval and uncertainty coexisting with this seemingly sunny economic outlook. And, if you think that it's only economics that matter and you can ignore all the rest of the stuff, then you just keep buying the market and assume it will keep going up. But if you believe that what's happening in this background geopolitical and cultural pattern matters, then it should definitely give you pause for thought. But what you can do as an investor is to try and get out of your tunnel vision and learn the first basic lesson of cultural anthropology, which is that not everyone in the world thinks like you do, and the world looks very different if you jump out of your comfort zone and go and walk in someone else's shoes with a sense of humility and respect for the fact that they might look at the world very, very differently from you. And it's a natural tendency for investors to project their own ethnocentric, Western rational assumptions on others. And it's a huge mistake. And we're living it, just to give one example right now, with Russia. Before 2022, most Western investors assumed that because Russia had the trappings of Western-style capitalism, that the Russian elite was driven by the same type of economic logic and rationale and profit-seeking goals that drive most of Wall Street. We now know that that was completely untrue. And anyone who invested in Russia, before 2022 on their own ethnocentric assumptions would now be regretting it. The critical issue, in my view, is how to avoid tunnel vision, or if you like, groupthink and herd behavior. Because when you look back at most of the big financial crises of the past, whether it's Lehman Brothers or anyone else, it's usually driven by a sense of herd behavior and tunnel vision, in that you get groups of people who can often be very successful for periods of time, and precisely because they're successful, they end up looking at the world through one particular lens and not seeing emergent risks or how the world might be changing, not seeing what I call category collapse. And by that I mean that we're all hardwired as individuals to put things into buckets to try and organize the world in our minds and physical space and our lives. And that's often the only way to be efficient and get stuff done. But if you create mental or organizational buckets that are very rigid and which don't catch up to how the world is changing, you'll miss risks and opportunities. And so the first thing any investor should ask themselves is, what kind of buckets am I using to divide up the world? And am I prone to using outdated buckets? And am I prone to tunnel vision?
Thank you so much for talking with us. This has been really amazing. I have learned so much from this conversation.
Thank you for listening.
Really appreciate it.
Thank you for listening, and best of luck in navigating an increasingly unstable and challenging, but increasingly fascinating world. So thank you.
Yeah.